morning, LifeWealth family. This is Hilgardt here from the captain's chair. I'm going to take these sunglasses off because I can't see a lick to see my notes. But I got to tell you, it's Wednesday, the 26th of October, and it's getting pretty here downtown Winter Garden. It's starting to feel like Halloween, and we got some decorations coming. So happy Halloween to you guys next week. It is my youngest son's birthday on Halloween, so we're celebrating Liam. But I wanted to just take a few moments today. Maybe today's recording is a little bit longer than normal, because I would like to kind of explain to you why are we seeing the craziness we're seeing at the moment in the markets, and how this all works together. So let me first explain. What the Fed is doing and thinking is kryptonite to the markets at this point in time. So the markets are looking very, very strong on what the Fed is doing and how the Fed is interpreting news. Then we get economical news. Economical news, for the most part, are positive, believe it or not. Even this week, we're getting earnings reports that's coming out from companies. And a lot of the economic news that we are seeing, if you would, probably the biggest number that is people look at is what they call gross domestic product. Gross domestic product is the output of our U.S. economy. And what's surprising is we are in what we call a technical recession, right? 2 negative gross domestic product, GDP, quarters back to back. So it means that our economy did not grow. It actually lost production in 2 quarters. But believe it or not, this week, we will be receiving numbers of the GDP number for the 3rd quarter of this year. And here it is. It's estimated to be a positive 2.4% to 3% for the 3rd quarter. What that says is that we are now out of what we call a technical recession. So what does this all mean? Doesn't feel that way to us, does it? We still see inflation very high. We still see the Fed raising interest rates. It feels a little depressing. And when we look at our statements and our quarterly statements, it's like, Hilgardt, I'm seeing a lot of red. I'm losing money. What can I do? So let me just decipher this for you. All right. When we hear good news about the economy, for instance, unemployment rates is very, very low. Average income is rising as a result of companies paying their team more money to keep up with inflation. We still see production in our economy. These are good things when we look at the economy, but we're in this funky era right now where good news is actually bad news, and bad news is actually good news, or is bad news bad news? It is really confusing at this point in time. So here's what I mean. When the economy is showing good indications of positive growth, the market interprets that actually as bad news, because the market looks through the lens of the Federal Reserve. When the Federal Reserve sees the economy is still strong and growing, the Federal Reserve is going to increase or continue to increase interest rates. And increase of interest rates is kryptonite to the markets. What that means is obviously the borrowing cost for companies is higher, therefore their profits is lower, and therefore the markets is trying to correct for that. Now, if you followed all those things, congratulations, you got Economy 101 down, okay? It is that confusing at times. Now, it's relevant at this point in time because we just look at the markets. So let me restate again. The markets are trying to estimate 6 months ahead of where the economy is today, always constantly about 6 months ahead. 6 months ahead of where the recession is going, 6 months ahead before the recession comes out of a recession. So let's just talk about recession for a second. Many believe that we are in a technical recession, but the real recession is not here yet. And I think we're anticipating that. The biggest question is when will the real recession start and how long will it last? It is a fantastic question. Many economists believe that the real recession will only start in the beginning of the 3rd quarter of 2023. They could be wrong. They hedge and say, well, we could be wrong. It could be starting as early as in quarter 1 in 2023, which would be January of next year. Or it can really only start in quarter 1 of 2024. It gives us an idea of how long will we see the pain in the markets. How patient do we have to be? And it comes down to this real issue. And this is this. When I'm seeing a lot of red in my financial statements, when I'm looking at this and I'm just enduring pain, and most of us, we all are enduring pain, anything from minus 15 to minus 30% in different investments at this point in time, a lot of pain. What is the appropriate action that I need to take? What's the wise thing I need to be thinking about? Has a lot to do with human nature wants to stop the bleeding today. All right. If I want to stop the bleeding today, just know we're locking in losses of minus 20%. But you could argue, Hilgardt, well, I am not locking in losses going forward. The best thing you can do is take cash and invest into different areas. Right now, we see a great opportunity be 2-year treasury bonds, growing at about 4.5%, guaranteed by the federal government. Really good opportunity. Another good opportunity, you might have read about this, is I-bonds. You can invest up to $10,000 per person in an I-bond. It's paying about 9.5 to 9.75% interest. Has a 30-year hold, but you can get out in about 2 years. Really good opportunities. And then, if you really can have a 3 to a 4, maybe even a 5-year time horizon, buying equities right now is a buying opportunity. And we can see that by the measuring of pessimism. There's a pessimism index that is measured that says that investors in general are getting to the highest point of pessimism. When you see that, that's a buying opportunities in equities, but you do have to have a 3 to 5-year time horizon. So nobody knows how long this recession is going to last. Nobody really knows when it will start. So I believe it will be over in 5 years from now. And when that's the case, you want to look back, you would look back and say, boy, I should have bought some really good equities at that point in time. The buying opportunity is there right now. Now, I'll leave you with this. Just how do I manage the pain? So Bloomberg did a poll of about 22 equity strategists. That word just means professionals that are buying predominantly stock, and try to get an idea from them, a consensus of where they think the S&P will end at year end. Now keep in mind the S&P as of yesterday is about 3,820. Came back quite nicely. We dipped as low as below 3,600 here in the last 2 weeks. The consensus of all of them is that the S&P will end at 4,054. 4,054. And then the outliers say it could be as bad as 3,200 or it could be as great as 5,000. All right, so it gives you a little bit of perspective. At least not even these equity strategists can really predict the markets. But what we're seeing at this point in time is that the markets have baked in a lot of the recession numbers. Just the degree of recession, the length of recession, and when it really starts taking place is what will alter the movement of the markets. So if the sun is shining in your eyes, and surely you're from the cockpit, it's shining in my eyes. That's why it's got these cool glasses, okay? I just encourage you, put glasses on. The glasses is the right perspective. Think about your unique position, where you are in life. If you're in retirement or very close to retirement, this year and what we have done so far for you matters a tremendous amount. We have really looked at all our clients' portfolios this year who are specifically in retirement or 3 years away from retirement, and we rearranged already our strategies in order to be able to help you not lock in losses. If you are 5 years or more out from retirement, you ought to be thinking opportunistic. Opportunistic means, hey, I need to be thinking about how can I buy low? How can I buy low? If you got any questions or you are uncertain about your unique situation, or the sun is just shining so bright and you don't have one of these, you can call us at any time and we can sit down and just be perspective for you. We can kind of digest through all the different information and different articles that's out there, and we can give you the truth in a straight way. Feel free to pass this video on to some of your friends. I found here that this is the period of time where most people are looking for advice and they're looking for straight answers, and I believe we can help. and happy to help, happy to sit down and have a 15-minute conversation with any of your friends or family members that are looking for help and looking for perspective. We love you. We thank you for being part of our family. It is a growing family, and we're all looking forward to celebrating some good times next week in Halloween and then my son's birthday, Liam. Have a great rest of the week for yourselves and enjoy this beautiful weather.